Hi, Madam. Good afternoon. Today, our team is going to present Article 2, Assignment 2. Our article name is the impact of GST implementation on the stock market index volatility. So, first of all, I will start with the introduction. There were four main concerns on the studies before the conduct of the studies, which is effect on price level, possibility of being regressive as it tends to extract bigger proportion of earnings of lower incomes compared to higher income, possibility of increase in tax rate, and misuse of revenue by irresponsible government due to corruption and lack of accountability. So overall, the study has its purpose to find out the impact of GST announcement and also the implementation on stock market volatility. The stock index data range was from June 2019 until November 2016, and GST was withdrawn officially from 1st June 2018. Secondly, the problem statements. Okay, once there was announcement of GST, there was a shock in household purchase patterns due to fear of price hike. So it indicates that the market reacted before implementation itself, and the new tax policy wasn't welcome among household. Changes in return. So the study also indicate on the changes in return to the investors after introduction of GST, and it also shows the impact on short-term and also long-term investments volatility. There was previous studies to find the impact on market volatility when there is a macro news announcement which wasn't focused in Malaysia context. But in these studies, it is more to relationship between GST implementation and KLCI market in the Malaysian context. So the problem statement under literature review will be continued by Vinodini.
Good day, madam. I will explain on the literature review, the findings that we found from under this area. Firstly, the sources. The sources we used in this article were relevant and reliable for the discussed topic. There were several sources presented in this article, which is the Rose 1966 and the Adjaci 2009, one of the most significant sources. This is where the source being shared about a theory which is called arbitrage theory, which enables to understand the relationship between the GST implementation and market volatility by examining the macroeconomic factors, that affect the stock market and the influence of risk and return in the market. Another source, which is Hodder and Jackwood 2011, supported this statement by saying the macroeconomic factors does have potential impact on the asset return, which reduce the market return and the purchasing power of household. Indirectly, increases the price of goods and services. Subsequently, the information shared in this article were having a balanced discussion as it was not too broad and it was not too narrow. It wasn't too broad because the facts that shared in the article were impactful and relevant topics such as tax policy, the arbitrage theory, proxy tax hypothesis, FOMC effects, and pre and post announcement of GST effect on the market volatility. It wasn't too narrow as it was not focused on single aspect, but made the viewers think in various perspectives, such as macroeconomic factors and also the stock market behaviors. Concurrently, if we look at the time relevancy of the sources used in this article, it was not for the period of 2020. It was not relevant for the period of 2023. But if we see the year that the article published, it was 2018. So the sources that been used at that time was relevant to the article. The This is because the article used the older sources which used as a reference of historic context, while the most recent sources till 2017 year they have used the sources which Kong Sleep and Matters 2017. We can see that the older and the most recent sources complement each other well in analyzing the study. Lastly, the article review were not biased or have any conflict of interest because the organization involved in publishing this article is were the universities who basically the researchers for the studies, and also the macroeconomy variables such as producer price index PPI, consumer price index, and unemployment rate that might over that might over influence the study were also controlled in this article. That's all from me. I'll pass to the next one.
Okay, madam, now we will look into design and procedures of this article. So first will be the method I've used, which is empirical methodology by using real world data, such as using closed data prices of Malaysian stock index and also indicators of macroeconomic. This is used to analyze the impact of GST and market stock volatility, and then whether this study is an original what it is a real original study. It is because the researchers have used the real world data information. For example, they have used daily closing prices of KLCI, and then future of KLCI, CPI, PPI, and more. These values have taken from Department of Statistics Malaysia, and this gives a strong evidence that this study is an original because the author is researched the market reaction based on higher market volatility due to the implication of GST and differences such as pre, post, during, and after GST. And then what is the formula they have used? It will be GARC. It is known as generalized autographic conditional heterostatic. It is used to analyze and model time series data, particularly financial data. Based on the article, this model is used to capture and analyze the Malaysian market volatility, which considers persistence and clustering volatility. This model is an appropriate method to explore necessary volatility features to study prevent unreliable conclusion for the future. And then whether the structure is systematic. Yes, it is, because researchers have researched into 4 categories such as pre GST, post, during, and after GST. And the equation they have included will be mean, variance, and diagnostic test. In detail, the data provides negative and positive impacts and status, which helps the investors to whether they want to invest during this time of period and help them make decision. Besides that, the article does not explicitly mention whether it is a conduct of pilot study, but it is focuses merely on primary research methodology and analysis of the data without discussing the preliminary pilot study. Besides that, the data I've used would be the daily closing prices as previously mentioned, and then secondly will be macroeconomic variables such as CPI, PPI, and also UNEMPR were used as independent variables to control their potential influence on stock market volatility. Third will be periods that related to studying, including the pre, post, during, and after GST announcement. And then what method they have used would be stratified sampling method, which was divided into 4 periods. Pre would be from 1st June 2009 to 18 June 2014, post 19 June 2014 to 15 November 2016, and then 19 during would be 19 June 2014 to 31st March 2015, and after would be 1st April 2015 to 15 November 2016. That's all from me. Now I'll pass it to the next person.
Thank you, Ms. Vinodini. Now moving on to the data analysis and presentation. In this article, the data was analyzed using systematic steps and statistical techniques to investigate the impact of the GST on the Malaysian stock market. Specifically, the study used few statistical techniques such as augmented Dickey-Fuller, ADF, and Phillips Perron unit root test to assess stationarity and employ a GAC model for volatility analysis. The study divided the data into pre and post GST periods to evaluate its impact. And also the data type of this article is quantitative because it included daily closing prices of stock market index and numerical macroeconomic variables. Moving on, the study relies on statistical and empirical methods to analyze this quantitative data. And for the finding support hypothesis and purpose, it indicated that the implementation of GST increased Malaysian stock market volatility. These findings supported the study's purpose of investigating the impact of GST on stock market volatility, but did not fully align with all the initial hypotheses. And then for the weaknesses and problems part, the author did not discuss the potential weaknesses of this study. This article discussed that the APT and GAP methods were used in controlling the macroeconomic variables. Moving on to the next slide. So, Madam, as for the conclusion part, we can analyze that the article are closely related to the original purpose of the study, as it looked at how the GST affected the Malaysian stock market. So the results of this article is the GST led to more ups and downs in the market, which affected prices and made it harder for people to buy things. In short term, GST affects customer buying power. Besides that, in this article also, they have discussed about the implications of GST. Firstly, when they imposed GST in Malaysia, the market got unstable as the people and businesses might not have liked it. The article suggests that the educational programs conducted by the government to create awareness about GST did not have the desired impact on market participants. Not only that, the impact on macroeconomic variable can attract the interest of economists and also analysis on how economic factors affect the stock market. Overall, the public and consumers feel the effects of market ups and downs, which can impact the overall economy. So that's all from us, madam. Thank you so much.